zone, there are three aspects. You have your mental conditioning, body conditioning, and technical conditioning. And that if all three are aligned in the middle, that's your zone. This is your focal point. When you have all these three aligned and you have that focal point, then you'll be basically what we call trading in the zone. You're going to be in a state of focusedness where pretty much whatever you touch when you're trading turns to gold. And so that is same principle in sports. Business, and in this particular case, trading business, either full-time or part-time. And the reason being is that regardless of what we do in trading, we are always competing against others out there. And these others are other retail traders, also have one focus in mind, is to make money. Retail traders, and of course you have your institutions, your fund managers, and then for money managers, retail traders, you have your professionals, and then you have your novice amateur traders. Professionals are like myself, that we trade for a living, and at the same time we trade basically full-time. But I know other traders out there too who also trade part-time, but they also make money consistently. Amateur traders are more the ones who trade mainly for as a hobby, or mainly to use trading as an adrenaline that will fulfill whatever missing in their lives. So to be consistent in trading is that 99, well, I would say 80% is the mental conditioning component. Technical is 10%, body conditioning is 10%. And then you have what we call the mind-body continuum, where the mind cannot function if you are not well rested, if you don't eat right, you're not hydrated. And if you can't function, then and even though you have a really good technical skills, it wouldn't work either. So they all go hand in hand, and that you won't be able to execute on time when it's time to execute, because you are now in an emotional state of fear and greed, regret, irritation, and the like, right? So you have these all three moving in motion, which you are not even aware of. Okay? So when you're competing and you're trading against others, the awareness has to be in place within that moment. And the self-awareness, the mindfulness from the mental conditioning is an important element. Okay, so that's why these three aspects needs to be put into place in order to be in a zone. When you're in a zone, this is where the magic happens. Anything pretty much you touch turns to gold. Okay, so that's why if you're only focused in trading in terms of your technical skills, it is not enough. And hence, this is why if you go through your results, and I invite you to download all your trading results, look at the trades that you made money on versus the trades that you lost money on, and then I want you to go through the process of, okay, so which one, in order for this to be profitable, what did I do from top to bottom versus the trade that you lost? So were you more in the negative state or in the positive state? When you can detect that, I guarantee you, it's a big G word, that when you made money is when all three were aligned. Okay, so move forward basically from there. So mental conditioning is when you as a trader can control your own emotions, especially the negative emotions, emotions of fear, sadness, irritation. And if you cannot measure your own emotion before trading, then I also highly invite you to do that before trading. Also to be in a mindful state, to have the self-awareness, and that yourself controls your ego, not the ego controlling you. So what does this mean? The ego is not you. There is what we call the self, which is now your being. What does this mean? Well, we have Herman here, welcome. We have Marty, we have Eric, we have Tariq. Okay? So all are those names that you have at this point in time are just labels that your parents gave you. So the question is, then, if your name is just a label, then who are you? Who is you that is inside your body? The body is just simply a host. So if the body is just a host, then who is that inner you? The spirit, the light, consciousness. So have you even thought about that? This is simply the being or the inner you. Is that if you are saying to yourself, well, I'm a person of love, kindness, patient, disciplined, passionate, focused, then you are defining exactly who you are. Okay? So if you would be able to define that of who you are, not the ego state is simply a person who is self-conscious, someone who is in a fear state, anger state, irritation, irritated state, someone who is arrogant rather than confident. Therefore, if you are in an arrogant state, fear state, anger state, and it controls you, you won't be able to trade straight. In other words, you're not going to be focused because that's what's controlling you. For example, I'll give you an example, and this happens quite a lot for day traders. The markets lately, when we look at the VIX, volatility is pretty small, not like compared to here when there's a lot of volatility. Volatility is awesome for day traders or traders in general, and I love volatility because without volatility, you won't be able to make money. It doesn't matter if you're trading stocks, futures, currencies, or options. Volatility is important. So that means then that if you traded, say, the E-minis or even the NQs, NASDAQ, let's say I'll take the past 2 days. Today is actually, it's pretty flat. There's nothing that's happening. But anything that happens prior to news or when the news happens, you will see a lot of movement in the markets. You'll see a lot of volatility. So today there is really nothing that moved the markets. Why it was flat. The futures market happened actually pretty rapidly. approximately around 12-ish. That's 12 p.m. 6, 5, 4, 3, 2, 23, 12, 1, 2, 3, 4. So what, 3, 4 o'clock to, no, this is 2 p.m. It was Trump here. When the Fed, Jonathan Powell basically spoke at 3:15 here. So around 3-ish, when he spoke, then there was activity. Likewise with the dollar index, currencies, any type actually, whatever you traded, there was some form of volatility. And then here, 1500 hours, right? To Trump spoke. Notice in terms from low to high, 2652 to 2669. That's around 17 points right there. Then from here, 55.69, that's another 14 points. So if you're day trading within those two hours prior to the news when Donald Trump spoke or when Powell spoke, then it's good for day trading. Now, if, let me maximize this a little bit more, I will add a rectangle right here just to show you. Oops. Let me change the color to yellow. Okay, then I'm going to change this even just to a 5-minute time frame. Boom. So if you're a part of your expectation is that, hence the word expectation, you're expecting that the market will go up based on your own trading methodology, trading system, and in most cases anyway, that if you are using expectation or any form of a trading system like pattern recognition, for example, they are all very subjective if you're using any form of any type of indicator. But if you don't trade pure price and you don't observe price to note where price is going to be based on what institutional traders are doing, then you're going to be in trouble. That now means that your own perception based on expectation that is very subjective leads to negative emotion after negative emotion after negative emotion. What do I mean by that? For example, is this. Say for argument's sake, you're using a price pattern right there called Morningstar pattern, and part of the expectation that it's a reversal pattern, and then there's no indicator over here. For example, you have an RSI, and it is, say, for example, pointing to the upside, or you have stochastics, a type of oscillator, CCI, and it's also pointing to the upside, and then you bought. All of a sudden, it didn't want to perform, or it didn't perform what it should be. Instead, it went now on this side. So what happens then? Either micromanagement will happen, fear kicks in, and revenge trade will happen. Great, I got stopped out, and then you will buy more, part of your revenge trade, because you're now in a fear irritated state, and then you got stopped out again. Rather than reversing your position, you bought over here, you didn't close, and it kept dropping, and then now loss after loss after loss. Why? Because when you are in this state, the ego now runs and controls you without even you being aware, rather than stepping aside and said, oops, oh my goodness, okay, this is a correctional aspect right there based on a lot of force, a continuation of force. You know what? When there's a lot of force, I will sell and I will not buy. And now you're now selling, you are now with the wave, you are now with the trend, and that's where you're making money. So when you have the awareness and being mindful of your own emotions, of your being, rather than on the ego controlling you because of your emotions, then this is where you will make money. But how can you be in this state? How can you be focused, being aware of your internal being, internal emotions through awareness and mindfulness? And this is something we're going to do pretty shortly. So do you have any questions? I know if you're a novice, you might not understand what I'm talking here, but if you have been trading and you have a lot of experience, then you will appreciate what I'm actually discussing here. And the reason being, a lot of novice traders think that to make money in trading is all about, trading skills or about a system. And hence, that's why they're novices, because they don't know what they don't know. Exactly. What I'm teaching you here in fact, is more of the advanced level of trading, where the trading system is no longer the actual issue. It is more of the mental game component. Does it make sense?
Yes. Can you hear me now?
Oh, yes, I can. Is that you, Marty?
Yes, I ran downstairs and got my other headset.
Perfect.
Hey, yes, I think you're spot on. I totally have experienced what you're saying, and I realize the mental side of the game is so incredibly important, and self-awareness, being aware of what you're experiencing internally and how that's impacting your trading is just critical. I didn't know that. Go ahead.
No, go ahead, please, Marty. Yeah.
No, that's it. You're spot on.
Thank you. Thank you. All righty. So let's continue. And then the body conditioning is simply, in my honest opinion, because despite me being 45, I'm still an athlete. I still compete in Brazilian Jiu-Jitsu. I no longer compete in Taekwondo. I just coach in Taekwondo, mainly at Stanford University. But as a competitor, when you compete at a high level, because I like say my next goal is to compete in the World Masters Championship. It's going to be in Las Vegas, which I did that a couple of years ago and it came fourth. But now my goal is see on how far I can go. And the reason why I still compete is simply to test my own skills in a time limit of around 5 to 7 minutes, basically. So when I'm trading, the idea of it is also the same. Because when we're trading, we're still competing, but at the end, we're competing against ourselves. We're not competing against other traders out there. Of course, it's a zero-sum game. There's a winner, there's a loser. Now, when you're competing against yourself, mainly like, say, greed. If you're greedy and the market doesn't want to give you any more and you're making money, make sure to take your money and run. Unless the system or the market is still giving you, said, hey, we have more room in order for you to make money on. Then greed is good because there's more. But if there's a ceiling where there's nothing more, then the abundance component of self-worth needs to be put into place. So why is that also important when we're competing? Well, when you're competing is to be aware of all these type of situations, to be adaptable with the markets, to be adaptable with your opponent, to be adaptable and knowing your own body when you are against another person that you're competing against. So if the person's too big and you're too small, there's no way I'm going to use power. For example, the market's also the same. There is no way that you can compete against an institution if they're the ones who is resisting price points. If you're part of your expectation and you're going to push the price to the upside with your small account, even if we combine all our money together, there is no way that we can compete against them. If you haven't been to a trading floor, I think, well, New York Stock Exchange is definitely, it's challenging to get in, not unless if you know somebody who trades on the New York Stock Exchange. But even if you know somebody, you better make sure that the guy is there actually, because if he's not there and you want to ask somebody, forget it. Chicago will be the easiest. If you know somebody there, then I invite you to go to the S&P pit. The CBOE is still open. CME is no longer open to the public because 80% is computerized. But if you see, and if you are the trading floor, because once a year I bring private clients to the trading floor, so because it's important for them as traders to see the mechanics behind what they're trading or behind a chart. Like the S&P, for example, where the S&P is the major kahuna, and if those person is trading stocks, then it's a minuscule part of the S&P. But nevertheless, if you are on the trading floor, you will know exactly who these institutional traders are, whether it be Goldman Sachs, JP Morgan, and so forth. And the amount of money that is being bought or sold in an instant, it is ridiculous. It's amazing. Now, if you're a retail trader and part of your expectation because you believe that you can push the price to the upside, forget it. That being said, to be consistent in trading is to ride the waves. So if you're observing institutional price points, mind you, institutions will always leave clues. They will leave clues in the chart because price is everything. That price is going to be, what do you call it? Stamped, there you go, on a time by time frame. And when that price stamp has been stamped, then institutional price point as well will leave those clues for you. But it's up to you to find those clues. That's why for me, price is everything. And once you can read price, you can detect whether an institution is selling or buying. Volume is just a thermometer. It doesn't give you supply and demand, unfortunately. It is the amount of transaction that has been transacted in the amount of volume within that time frame. Hence, for me, it's just a mass. That's why if you know physics, force that gives you a lot of force is mass times acceleration. When there's acceleration, there's movement, there's momentum. You can calculate that mathematically in terms of the amount of force that has been pushed through either to the upside or to the downside. When that happens, then you have to ride with it. You cannot go against it. Therefore, imagine I'm a 150-pound guy, 5'8", 5'9", and if I'm basically rolling or sparring against a 250, 220 pounder, it's me. Like, just imagine me. Would you be able to bench press this candle right there? Heck no. So if you are thinking of buying when there's a lot of force, you will lose, especially if you are buying at a level of supply. When you're buying the price of supply, when there's a lot of sellers resisting price points over here, and they're all institutional price points, you will lose 99.999% of the time. It's like you bench pressing a 200-pound person. There's no way you'll be able to do that. The only way to defeat that is when you are with the same amount of energy with the flow of where they're going. In other words, if they're going to move to the left, you have to move left with them. If they move to the right, you have to move right with them. Markets are the same, that if they are dropping, you have to drop with them. If they're going up, you have to go up with them. At the same time, there are always going to be ceiling or supply areas where price is going to stop, either to the bottom at the level of demand or supply. At the end of the day, if you know how to read price, it's all about supply and demand, right? So, and then not just that component, then the emotion has to be put into place. So there are a lot of different factors when it comes to trading. A novice trader will always think like, oh, well, I need confirmation. When you're seeking confirmation, you're done. It's too late. Why? Because your risk will increase, your probability of winning will decrease magnificently. Okay, so these are different factors when it comes to trading. And just imagine the amount of data that's going through in your head. And then once you have the emotion comes into play and you're no longer being aware of your plan, you will no longer follow your plan, unfortunately. Okay, so that's one of the major aspects. But nevertheless, it is imperative that before trading that you are well rested. If you're a day trader, then make sure you need to have enough ample sleep. One of my friends is a neuro professor, neurologist professor at Stanford University, and he said, whether we like it or not, the body, the mind needs an 8-hour sleep of rest. And I don't get enough hours of sleep because sometimes I just get too excited because I love trading that much. So on average, I sleep about 4 to 5 hours. But in between, somewhere, part of my meditation is getting that enough energy to go through, because I also have kids that I look after. Trading, I mean, don't get me wrong, trading is a phenomenal business because it gives you the ability, the time and freedom. And hence is why I love what I do, is because I have the ability to teach others, and at the same time I also have the ability to spend time with my kids. I only trade maybe an hour a day, because the rest of the day anyway, when I'm teaching, I already know which one's which. When you're teaching or when you're discussing about trading to someone else, you will know automatically what to do, because you're looking at potential trades, you're showing, you're demonstrating, and hence that's why your trading level in terms of knowledge and skill will always go up if you're demonstrating, you're teaching, and you're practicing. Practice actually is very important. Number 2 is you need to be hydrated. At least a gallon of water every day. It's challenging to take 3 liters. This is like a gallon of water on a daily basis. It is proven, Google it, that when you are dehydrated, guess what happens to your cells? Your normal cells that are meant to be circled, that has a lot of oxygen in between, will be clumped up all together, creates lactic acid buildup, and also depending on what you eat, and then all of a sudden you feel tired, lethargic. When you're lethargic, the brain cannot function. This is when you start to, guess what, get headaches. When you have headaches, or sometimes you start yawning, you're falling asleep. And if you eat fatty foods, especially if you live on the East Coast, then you're pretty much okay. But if you live, say, on the West Coast, actually, I beg your pardon, no, because we're 3 hours behind. So if you live on the East Coast and you're trading Eastern Standard Time and you have a fat lunch, guess what? And 2 o'clock happens Eastern Standard Time, you start to be lethargic, you start to get tired, and then you will make mistakes. I used to live in Florida and actually North Carolina when my ex-wife used to go to Duke. I had 10,000 shares of Apple, and I accidentally pressed the button during lunchtime because I was tired. Luckily, it went in my direction. I closed it, but guess what? After that, never ate during lunch again. Oh, but if I do, something light. So would recommend to stay away from fatty foods, stick to fruit and vegetables, and then make sure to be on an exercise program on a daily basis. A lot of trading firms. I know for a fact, one of a friend of mine who owns a trading firm in Chicago, um, which I referred to of my students, and these two guys, man, they're awesome. They've never lost a single month for the past 2 years since I referred them to them. But trading firms, mind you, they have also very strict rules. So, but nevertheless, as part of that is they give them a gym membership because it's imperative for their traders to exercise on a daily basis because trading is also very stressful. To really stress. I know personally one guy who traded the Chicago trading floor for as an options trader for 27 to 29 years. Then middle week, every Wednesday, he goes to a nightclub and just dance his night away just to really stress. Some will play golf. So the question is, what do you do as a form of exercise to really stress when you're trading? In the mornings, if you are a day trader and you're in the morning, I would recommend to do some form of a jog, brisk walk, stretch, any form of exercise that will get your blood flowing. Because when you're still sleeping, sometimes you're still in an alpha state. Or when you're in an alpha state, you're like half asleep, half awake, and the brain cannot function properly. Okay, so very important. Lastly, your technical conditioning. Technical conditioning is simply your skills and knowledge of trading, your risk management experience, money management experience, profit maximizing strategies. So mainly everything that has got to do with your trading in terms of technical skills. If you have a lack of skill set and knowledge, then make sure to get educated, get further education, in my opinion, just to get that up and running. Okay. So what causes distractions? Simply lack of planning, lack of preparation. When you have lack of planning and lack of preparation, then all of a sudden you're in a rush, anxiety kicks in, and then you're being impatient, then fear of missing comes into place, and you're just pressing the trigger for no reason. Okay, so it's important to have a plan and be prepared ahead of time. Lack of sleep, and sometimes when you're too tired and you're just forcing yourself, there's the keyword, you're forcing yourself to trade, you won't be able to make money, because now you're no longer focused on the process of trading, but you're just focusing on want to make money. So if you're in that state, stay away from trading. I highly recommend that. Lack of self-awareness, when you're in that state too, stay away from trading. Lack of training, then go back to demo trading. Lack of discipline, go back to demo trading and keep practicing until some form of consistency comes into place. If not, then get some form of training. The way how we do things is we do a lot of practice, but it's mainly on the three components of mental, technical, and body. But on the technical component, live trading is important for us. Hence, that's why the vehicle that I use to teach, to train people is currency markets, because price is important. Once you know how to read price, it doesn't matter what you trade. And the reason why Forex is because it's cheap. I don't let students to go more than $500 when they're in the training environment, and their job is to master the process for consistency. And their job is not to focus on making money, but mainly the process to make money. Okay, so how to be focused, we're gonna go through this. Firstly is you need to have a detailed trading plan. A detailed trading plan, let me just share something with you. Just bear with me for 1 sec. I'll just share something. So here's a homework from one member. Then we have a detailed trading plan that they have to fill in each and every time that they're trading. So our detailed trading plan that I created is simply based on the three aspects of conditioning, but mainly the mental conditioning and the technical component. The body has already been done, or the student already has done that prior to coming into class or prior to trading anyway. So like here, what is the purpose of trading? At the end of the day, the purpose for trading is simply to make money. And then the being component, in terms of who you are as an individual, how you're feeling based on your state of emotions, what your values and beliefs within that moments are, your emotions before, during. That's why if the during component or even before and during is that you're in a state of negative emotion, don't trade. You have to get out, do something, go for a walk, or just be aware of those emotions and let go. And then go back to your trading room and then start to trade. And then from there is we have 5 steps. We look at the macro fundamentals from the indices, from the Dow, the VIX, dollar index, gold, oil, copper, 30-year yield. And then we see if there's divergence because they need to be in sync. If one of them is out of sync, then there's a divergence, right? Because the markets, they're all connected. And then from there, we scope the markets. We go through via what we call multiple time frame analysis. And then is the price at a level of demand, supply, is it an uptrend, a downtrend? Is it in transitioning? It is actually this technique is so powerful, and you're forecasting what the next move is. Like, when if you play chess, trading the markets is also like playing chess. And why do I say that? It's simply as long as, see here, this is the reason why results will always vary, is because the unknown. When the unknown is existent, people will guess. If you're guessing, then you're just gambling. So if you look at in terms of your results, what's your win to lose ratio? If it's a 50-50, then that means something needs to be done in terms of your trading methodology. However, if you can create a probability and you're forecasting, my job as a trader is I'm a technical analyst. A technical analyst is someone who forecasts future price movement using current and past data. When you have that data, you have proof, and you create a statistical probability, then you would be able to forecast either to buy or sell based on that statistics that you have for yourself. Probability is very important. Now, once you create a probability, you will know exactly what your risk is going to be. You will know exactly what your position size is going to be. You will know exactly where your target points is going to be. Because as a form of a tip, there's 3 components in technical analysis: price, time, and the last one is distance. Knowing your distance from the point of entry to the point of exit is very important. You need to know how to calculate that based on your mathematical equation of your probability of winning. Once you know your probability of winning, then it becomes easier. People always say it's a reward to risk ratio, that it's meant to be a 2-to-1 reward to risk ratio. No, probability is so important, because if you have a low probability and you're seeking a 2-to-1 reward to risk ratio, you will never get it. Even if you have a high risk, high reward with a high probability, you can make money for sure. Why? Because there's only 2 ways price will go, either to the upside or to the downside. That's it. It will go sideways as a form of stability, but at the end, it has to make a choice either to go to the upside or to the downside. But that probability of winning is based on one major factor, which is now the trend. This is what we call it the energy flow of price. Very important. Once you know the energy of where the direction of price is going to go, It doesn't matter where you're buying, but mainly if you're buying at a level of demand, your risk is so small that your probability of winning is so high, then you will achieve a minimum of 2-to-1 reward to risk ratio. Okay, so that's mainly just a form of a tip. Also, it is important from a point of view from not just the hydration, but the meditation and visualization. If you do not meditate, I highly recommend you to learn how to meditate and also to visualize. Sorry, the other factor is that visualization of where price is going to be is very similar when you're playing chess. Is simply knowing where the next movement of the market is going to be. When I say the market, I'm talking here about institutions. What is the next move of an institution? Because they know exactly what the next move, because they know what the results of any upcoming news, it's already been done. A friend of mine, actually there is an article. I want you to read this. Hang on a second, let me find it. Bear with me for 1 second. It's actually a very good article that I recommend you to read. Let me get the link. And I'll put it in a chat box. So the article is inside the world's most elite and secret traders club. The price of admission is at least $25 million. So these guys have all the pieces of information ahead out of everybody based on an institutional component. That's why you and I, that we have a very small chance of winning if you're just only dealing with a system. But if you do not have the piece of information that needs to be created on top of your probability, your odds of winning are so small, and hence your inconsistency will be bigger than your consistency because of this type of trading that a lot of traders, or it's a very small amount of people, like it's only why 5% of successful traders make money is because of this type, because they have all the piece of information ahead out of everybody. So if you have that piece of information, the institutions already know what those numbers are, even before it even comes out. For example, tomorrow we're going to trade this. This is 2 p.m. Pacific Standard Time, 5 p.m. Eastern Standard Time. Institutions already know what the numbers are. Some of the policy statement that has already been given out, they already know. Crude oil inventories, people already know those numbers. When I say people, institutions already know those numbers. Purchasing price index, institutions already know those numbers. So sometimes what they do is that they will fish retailers. Sometimes they will manipulate the price pretending that they're selling, but in actual fact they're buying on the bottom, or they're pretending to be buying, but in actual fact they are selling. So these are the type of manipulation of what the market can do, or institutions can do. Remember, these guys, the house, they always win. You cannot be part of the house. You will lose. You cannot be part of the game. So the best analogy that I can basically give, I'm sorry, there is the link right there. Okay, I put it in the chat box. So it's a good read, which I would recommend is that I want you to be an observer. Okay, I'm sorry. Just pretend this is the whale. You know when those little fishes, I don't know what they're called, that sit next to the big humpback whales or big whales. I want you to be that. This is who we are. This is who I am. After me finding that out, finally, before, when I started trading more than close to 20 years, actually 20 years ago, 22 years ago, I started in 1998. I became a professional trader in 2002 and never worked with anybody else then. My background is physics and mathematics and computer science. I used to be a database administrator. I love my job, but unfortunately there wasn't no room to go. And then when trading came along, it became my passion. I used to be part right here. However, I wanted to transition to be here. I wanted to be an institutional trader. But instead, I ended up being, I call myself a professional observer. Professional observer is someone who observes the whale, the institution. That if they go up, I go up with them. If they go down, I go down with them. If they go sideways, I go sideways with them. Because when you are on this side, whether you are part of the masses of retail traders, you will lose. You don't even realize that your money is actually now gone. Why? Because it's a transference of wealth from the idiot to the well-informed. That was a definition of my first mentor, basically, who told me. And it was so true. These big guys have all the pieces of information, while these small guys are only focused on technical analysis based on a system using indicators that is way behind. Unfortunately, we need retailers to make money. So the idea for trading is that we can never be we're institutions in terms of where they're buying at manufacturing price. We can be as close as institutional price point, at wholesale price point, not at retail. Not at retail where they're getting close. I've heard it, I've been to a lot of trading seminars and workshops, and the reason is because I was there, have money shows and things like that, and some of the things that I've heard is ridiculous. Oh, you buy over there, here's a piece of the pie, and you want to make money consistently, just only get the piece of this pie, which is now, if this is where you're getting at, you only have that room to make money on. For me, that's ridiculous, because the risk is so huge that your probability and your reward is so small. And how about the probability of winning? It's also mediocre. As a mathematician, and we've done statistics. I mean, if you're a math guy, if you're a numbers guy, it doesn't lie. Numbers don't lie, right? So that's why I invite you to look in terms of your trading method. Are you really buying at wholesale price or retail price, and you're selling at retail price? And hence, actually, Wall Street Journal wrote an article that the success rate of retailers is approximately 55%. That's like gambling. It's a 50-50. You might as well toss a coin, heads or tails. While Goldman Sachs, who is one of the major institutions, in my opinion, they're the top institution in the world, they have success rate of 97.2%. This was even prior to high frequency trading. I believe the last time I read, they have a success rate about 98.2%, something like that, something ridiculous. And their server is the biggest size of a football field somewhere in the Midwest. And they have a piece of information of 1 picosecond ahead out of everybody. Hence, that's why they have a very good success rate. So to be an observer is like you watching two NBA teams. Like, say, for example, tonight the Warriors are playing the Pelicans. Where will I place my bet? Well, of course, I'll put my bet on the Warriors based on statistics. If you are not being biased, then you will know exactly where to put your bet on. I will put my bet on the Warriors at any time because they're playing here in the Bay Area. part of their players. They have full team, no injuries. And the Pelicans, they're not playing consistently, right? So if you're going to place a bet, the odds might be small, but at least I can win. You know what I mean? So same thing with trading. That's why for me, I love trading the currency markets, is because I can have a high probability if I'm trading the euro versus the, say, the US dollar, then based on the pieces of information that I have here, I know exactly where to put my bet. Well, the dollar has been so strong after the FOMC interest rates, or before the FOMC ratio released the numbers, the dollar has been going up. Then I will put my bet on the dollar and I will short the euro at any time, at any rate, right? So, but here you can also define, if you're trading futures, you know exactly what to do if you know what to look for. So, for example, the S&P currently, are you going to place a bet with the S&P? So to go long or to go short, but you need to find your statistics why you're going to go long or why you're going to go short. Okay, so once you have all those data, it becomes way easier when it comes to trading. Alrighty, moving forward from there. I'm sorry, guys, if I'm just keep talking. I just love what I do, and so stop me if you have any questions. Alrighty, moving forward. We're going to do some simple trading exercises before trading. Meditation is a very powerful technique, and the reason being is because it develops your focus, it develops your mindfulness, your self-awareness, especially to be in the moment of now. It also develops your intuition. Intuitiveness is the next level of trading as well. To be intuitive is when your inner being is in sync and harmony with your, what we call the mind, body, spirit continuum. Okay, so we're going to go through 3 simple exercises. We're going to go through first a breathing exercise. What I want you to do is I want you to sit down properly. Put your feet about 6 inches apart. You can lie down if you want to. Your palms either pointing down towards your knees or palms up. But if you're going to put your palms up, I want you to connect your forefinger with your thumb. And the reason being is because we are pure energy, and our energy vibration has to continue. Our energy vibration goes in a clockwise motion. Okay, so whenever you're ready, I want you to close your eyes, take a deep breath, breathing in and breathing out. Inhale and exhale. You're going to close your eyes until I tell you to open them, and you're going to remain to close your eyes until I tell you to open them. Close your eyes right now if you haven't done so. And I just want you to focus on your breathing. Inhale and exhale. If there's any thoughts that come into play, I just want you to acknowledge that thought. You cannot ignore the thought. You cannot fight the thought. Just acknowledge the thought and just let go. And then go back to your breathing. Inhale and exhale. Inhale and exhale. On the next breath, I want you to take a deep breath, breathing in, and hold it for 4 seconds. 1, 2, 3, 4, and let go. Exhale. Inhale. You're going to hold it for 6 seconds. 1, 2, 3, 4, 5, 6, and exhale. Inhale, take a deep breath. Hold it for 8 seconds. 1, 2, 3, 4, 5, 6, 7, 8, and exhale. And one more time, take a deep breath, breathing in. And I want you to hold your breath for as long as you can and count 1 Mississippi, 2 Mississippi, at your own speed and go. Good, you're well, doing well, perfectly. Just keep on focusing your breathing for now. I want you now to imagine your third eye. Your third eye is in between your eyes, is your third eye. And in here, I want you to imagine a blackboard or any type of color that you want to create for yourself. That board could be white, that board could be yellow, could be blue, could be pink, could be green. And have a board in front of you in your third eye. Once you have that in your mind, I now want you to count, and I want you to see the number 1. I want you to see it clearly, high definition, with 4,000 pixels or more. And I want you to see the number 2. And that color might be changing from blue to yellow to red to gold. Changing now to 3. If there's any thoughts that come into mind, I just want you to acknowledge the thought and just let go of it and go back to looking at your number. And the number 3 now morphs to number 4. The number 4 is so clear that you can almost touch it. In actual fact, feel it. Is it smooth? Is it soft? Is it solid? Is it rough? What does it feel like? And it's slowly changing to 5. 6. Notice the shape from 5 to 6. Did the color change? 7. Feel the edges. Is it smooth? Is it sharp? Is it made of steel, copper, gold, plastic? 8. The infinity sign. Notice it keeps continuing. It doesn't end based on its shape, its form. 9. Is it lucky? Lucky number 9. 10. Good, you're doing well perfectly. I want you to go back and focus on your breathing right now. Breathe in and breathe out. Breathe in and breathe out. In a moment, you're going to count to number 3. You're going to open your eyes, fully relaxed, energized, and revitalized. 1, 2, 3. Open your eyes, fully relaxed, energized, and revitalized. Great. How'd you feel with that one? What sort of challenges did you have when you were breathing and when you were counting? Did you have a lot of thoughts that come into play that you have to let go? What was it? How was the experience?
For me, like I was not able to picture number 1, 2, 3, but from 4 I was able to get it.
Nice. Beautiful. just took a while in order for the thoughts to let go, right? And then to get the focus of counting right there. Very nice. Thank you, Eric. How about you, Marty, or Herman and Tariq?
Well, for me, it was interesting. Early on, I was able to get the low numbers, like 1 and 2 were very clear. And then I kind of faded out a little bit in the 3s and 4. And then toward the very end, the numbers came in really crisp. And as a matter of fact, when you were saying the different textures, like whether it's made out of gold or rough or sharp, the numbers actually changed their texture in front of me. I would see them morphing from something ceramic to something like gold. It was very interesting.
Fantastic. Very nice. Very good. You see, that type of technique, you can also do it part of your visualization, depending on what you want from trading in terms of your focus, right? For example, if your goal is to make, say, $5,000 a month, or you can start with, say, 3,000, then 5,000, or 10,000. Those type of techniques are very powerful because the subconscious it cannot detect what's real and what's not real. So therefore, you keep on constantly doing that, and then you're also visualizing what your perfect day of trading would look like. And then guess what? It will happen because it is morphing. Like those numbers, all of a sudden it's changing color, and it's almost like you can feel it. I mean, when I'm also saying that it's sharp, it's almost like, oh, it's sharp. It's like, yeah, because the brain or the subconscious cannot detect what's real and what's not real. A good example is, check this one out. I want you to close your eyes briefly. Just close your eyes, and I just want you to go outside your apartment, your house, depending on where you're at, and I want you to see a lemon tree. And in that lemon tree, you see a bunch of beautiful ripe lemons, and they smell so sweet. You know that citrusy smell? That sweet, almost sourly type. And then I want you to pick one of them. I want you to grab it. Grab that lemon, that yellowish, smooth. And when you're touching it, it's almost like the smell is coming out and it's going inside your nostrils. And I want you to go to your kitchen and visualize it. Take a sharp knife, and I want you to cut it in half. And notice when you're cutting it in half, you see those little bits and pieces of smell and the liquid that's coming out. It's so juicy. And then squeeze it. Squeeze it and you mix it with water. It tastes so refreshing. Open your eyes. So you notice your tongue sort of like, you know that. Yeah. Yes. See, that's your subconscious
very much
thinking, right? Because it cannot detect it. It's when you're visualizing it, it almost notices that it's like it's almost real. That's why visualization and meditation is so powerful that it actually, it's been proven. That's why Olympic athletes or any type of athlete always use this type of techniques. Even car race drivers, they will visualize the turns and things like that, right? Where it's going to be, what gear is supposed to be in, is because of that aspect. So the last exercise we're going to do is what we call the dot exercise. So you should still be able to see my screen. And I just want you to focus on the dot right there, the black dot, for about a minute or two. And then I want you to be aware of those thoughts that come into play. And when those thoughts come into play, I want you to just to let go of the thought, and I want you to focus back to the black dot. And time. So what were the challenges that you've faced? What were the distractions?
The black dot.
I'm sorry,
There,
Marty. You got
sure,
muted there for a second. Say that again, please, Marty.
sure. For me, I didn't really have a problem focusing, but the black dot, it just it almost, the screen just kind of went blank around it, and the black dot got an aura around it. It was really unusual, and I just kind of stared at it. I didn't
Yeah,
really have a
cool.
problem.
Yeah, exactly. And for me, like looking at all of a sudden, I hear my distraction were the noises outside, and then I need to look at the time, and like yeah, then I go back to looking at the dots. And how about you, Eric, or Herman, or Tariq?
In terms of thoughts, no thoughts come in, but somehow I was looking at some white area, so my eye a little bit drifted towards a different area from the black dot.
Okay, great.
And then I got to pull it back.
Perfect. Nice. Herman or Tariq? I don't know whether you got a mic, Tariq or Herman. Okay. So, but nevertheless, and that's actually a really good technique. And the reason being too, when you're training, you're saying, let me just grab something different because it's here. So when you're trading, we're always looking at a price, right? And then all of a sudden, sometimes when you're trading, there's some form of distraction. So I would highly recommend turn your turn your mobile phone off. No texting, no Facebooking, no social media. If you are more prone to listening to some form of classical music, actually, it's good for the brain waves. I listen a lot to classical music or some form of meditative background, right? So that type of stuff. Sometimes I listen to jazz. Something that will make you be in a good mood. So, but if not, just pure quietness. That's actually also good. Um, yeah, texting, Facebooking, or any form of social media. Also would recommend to have some form of ground rules in terms of if you're trading at home is to have some rules between your partner or your family and say, hey, once the door is closed, I cannot be disturbed for X amount of minutes or 1 hour or so while I'm trading. So with my kids, they know automatically that I'm inside my computer room. No one's allowed to come in. Unless if I open the door, then that means it's an invitation that I'm okay. But if the door is closed, then nobody's allowed to come in. Live trading, because when we're live trading anyway, it's sometimes also good because you have other set of eyes. And if your method is 100% objective, and if you're analyzing, everybody's looking into it, then there's a lot of different things that we can see. I believe the more eyes, the merrier. Because when you're trading, you're looking at price, and you need also have a step-by-step process when you're analyzing your trades. For example, where's the current price? Okay, so what did it form? Well, it created a lower high, created a lower low. Price is currently at the level of demand. Well, price also is currently dropping. There's a lot of force to the upside, a lot of force to the downside. I have a bunch of lower highs. So currently, yes, it might be in a level of demand, and I can make between from 305 to 306 if I'm going to go long right at this point in time. Okay. Or create another strategy that if price corrects itself and it goes to supply, then I'll be shorting. Then I have a higher probability of winning. So create a process when you're doing so, depending on your trading system, of course. Okay, so those are the things to avoid distractions. Also, if you have a trading partner, always getting to get the job done. Mind you, too, though, the human mind can only focus for 45 minutes at a time. If you're in the computer more than 45 minutes, step out from your computer and do something else. Go for a walk, have some, I don't know, a bit of a break. So yeah, do something and then go back to your computer again. But making sure though that when you're doing, you're leaving, that you are not in the middle of high impact news is bound to happen, especially in the mornings. I believe that's also one of the major mistakes from novice traders, is that they don't look at the news, and next thing you know, they get out of the computer screen, then bam, they're getting stopped out, right? It happened a couple of times. Oh, I'm dying, I'm gonna go to the bathroom. And then I totally forgot that there is a report happening at, say, at 8:30 in the morning or 10:30. And then come back, I missed the prize that I didn't execute. And then boom, then dang it. So things like that. Because also start to be aware of your thoughts. What are those thoughts that are wanting to sabotage your success? Because sometimes it will find some form of excuses. Oh, I have to go to the bathroom. Or I need to make a phone call. I need to check my emails. Those are a form of self-sabotage, right? So when you'll be aware of those thoughts, just say, hey, you know what, thought? Thank you for sharing. I don't need you right now. I want to go back to my trading. And then the other tip to be focused, the subconscious, by the way, always loves goals. Therefore, before you step in I want you to create a daily goal. The moment you rise, when you wake up, you should be able to think automatically, okay, today is going to be a good day. I'm going to make money. I'm going to make X amount of money or X amount of percentage, doesn't matter what type, but you're going to make money regardless. And then also state positive affirmations. Like, I'm focused, I am disciplined, I am the best trader in the world, I am the best trader that I can be, I'm a consistent, powerful trader. So if you keep on doing it as part of your mantra when you wake up, it is changing your energy vibration. Okay, so this type of tips, once again, like I said, they are more advanced. It's no longer about your trading system. Trading system is one part of it. And then just to basically summarize it, to be focused has this simple type of techniques that you should implement in your trading system. To be focused as well during trading is to practice mindfulness. Ask this question, who are you being right now? For example, if you're currently in a profit, are you currently being abundant right now? Are you currently being greedy right now? And you will know what to do. Because once you answer that, everything will just follow suit anyway. Make sure to plan the trade the plan. Use your intuition. Intuition is totally different to what you think. It is mainly the next level, using the right side of the brain. This is when your mind, body, and spirit are one. It is your gut. It is your, for me, the intuition is when there's pain in my heart, I know there's something wrong. And then when there's, when, I don't know, I'm just going to share my experience, is that you're confident, you just know. It's almost like it is going to go. Like, say, for example, the trade for us yesterday was the CAD against the Japanese yen. The CAD Japanese yen, we've been waiting for a long time because we shorted here, shorted there, and waiting for it to basically drop. But there was a good entry to short it 2 days ago, and then it dropped yesterday all the way down below 84. And at the same time, intuition says as well, hey, you better get out, because all at the side there's no more. That's why you have to close. So it closed 80% of the positions to 90% of the positions. So 10 to 20% basis left. So once you just know, you have to follow that, and you just have to do it. It is challenging to explain, but if you experience that, then you know exactly what I'm talking about. Okay, that's why use your intuition. Any questions? So far, this is the topic for today. I hope you enjoyed it. By the way, before I forget, our spring quarter actually starts tonight. If you enjoy this type of training, we I invite you to attend, the class for free for 2 weeks, and simply just, send me an email. We'll send you the links. So it starts actually today. It's a 2-hour class, 1 hour psychology and 1 hour is technical analysis. And yeah, test it out. If you enjoy it, that's awesome. You might add in and add more information in terms of your knowledge in trading. Yeah, but other than that, if you enjoyed this class, thank you so much. Any questions? Does it make sense, by the way, for what we discussed here today?
Yes, I think the whole thing made great sense. I just need to sit back and kind of absorb all the things that I picked up tonight. It was I thought you packed a lot of information in tonight. It was really good.
Thank you, Marty. Good to see you. On Friday at 11 o'clock Pacific Standard Time. So there's see, that's why sometimes errors also mean opportunities. Hence, on the S&P, I did something where I analyzed and there was a mistake. So I'm going to share with you what that mistake was that could also add into your knowledge and not to do it, okay? So that will be on Friday at 11 o'clock. Other than that, thank you, Marty.
Thank you.
Eric,
Thank you.
I'll see you tonight.
Very good
Herman,
lecture.
no worries. Tariq, hopefully you can have a mic next time, and I will see you later. Happy trading and good luck, okay?
Thank you, Ronaldo.
You're welcome. See you soon.
Take
Bye.
care. Bye.